All right, man. Today is Tuesday. It is March 14th. Welcome to the Dog Walk, presented by Barstool Sports. I'm here with Chief. Chief, how are you?
I'm doing fine. How are you?
Yeah, you all right? You got some sleeping issues?
I don't know what's going on.
Yeah.
I haven't had like a week where I feel like I had at least 3 good nights sleep this entire year.
All right.
So I'm waking up in the middle of the night.
I don't like that.
It's bad. So if I get something wrong, it's not my fault. I can't sleep.
Bad sleep. You got your Float 60 in, so you might be able to.
Dude, that was great. Maybe we should save that for the mid show, but that was
good.
I might be able to remember. Yeah.
Good. I'm glad to hear that. Hopefully you figure it out though. Today's topic, pretty crazy.
Buddy, I am fucking fired up about this one.
Yeah.
Yeah.
We were between a few, but there was a lot of passion behind this topic, so we went with this one.
Yeah, and it's like the more you read and the more you different other videos you watch, and it's like I never put on cable news anymore, but this one I was like kind of fascinated by, and like you hear these different people from both sides being like, "Holy fuck!" So it's like I always try to like. Fox is probably bullshit. MSNBC and CNN are probably bullshit, but you can try to extrapolate out a few things that kind of line up and hopefully parse together something that's the truth.
Yeah.
And it just makes you, and then combined with everything else, I think Bloomberg did a really good job reporting on this. And it's just like, holy fuck, like here we go again, So, I mean, we can just get into it. We're talking about Silicon Valley Bank.
Yes, exactly.
So this is, it's a California bank. It's a regional bank. But they're huge. I don't even know if there's like an Illinois comparison. Maybe like if Fifth Third or something like that, it would be an Illinois regional bank. I don't know if they're anywhere else, but it's like it's a big bank in California, and it's one of the largest banks in California. It's actually the bank has failed. Okay, so it is the second largest bank failure in the history of the United States. Like that's how big of a bank failure this is, and they really service specifically the tech sector. So a lot of tech startups, Shopify, if you've heard of them, that's like a brand that I've heard of that has been with Silicon Valley Bank, and then Roku. I think a lot of people with the smart TVs know what Roku is. They actually, this is fucking crazy. For Roku, little aside, they have the FDIC, which is, we'll get into that. They insure historically up to $250,000. So if a bank fails and you have $500,000 in deposits at that bank, the government will basically like, here's $250,000, and sorry about the other $250,000. Roku has one checking account for the entire company, and it's at Silicon Valley Bank.
Whoa. Okay.
Now, the government has said that they're going to insure and cover all of the deposits in Silicon Valley Bank, which is a fuck ton. So they're not playing by that $250,000 because that's like an individual's thing. Like, you or I theoretically play our cards right. Hopefully, we would be able to accumulate that sort of money and be able to put it into a bank. Mm-hmm. But this Silicon Valley Bank has $175 billion in customer deposits. I think it was like 94% of which were over that. And maybe it was higher. It might have been 99% over that 250,000 limit. So it's like basically the entire, like all of the bank's holdings were about to be just fucking gone. So it's a huge bank in California. Like I said, specifically for the tech startup area, I think they've been the bank for at least like 50% of all tech startups in California go through Silicon Valley Bank. So it's a big deal, and so like the whole. Basically, you could argue that the entire tech sector, effectively, because they all, so many of them bank with Silicon Valley Bank, is at risk. Because if you don't have access to the money in your accounts, which is what it was going to look like until the government stepped in and bailed it out, and people are going to try to say that this isn't a bailout, and we'll get into it. It fucking is. So just, it's the FDIC, it's like an insured, the banks pay into it, it's coming from that fund. It's not. And we'll talk about the difference in a little bit. But we're talking about companies. So it's like, hey, we can't make payroll. Okay, like that's like the type of things that are at stake. We can't pay our insurance. And I've been with a company that failed, and much different industry, but that was always like a thing. It was like, if you don't pay like your workers' comp insurance, okay, because you just don't have the money for it, it like you're dead. Like you're fucking dead as a business. So if all your money, and that wasn't because of some banking crisis in my experience, it was because the company wasn't doing well. But it was like, that was always the thing. Like you can't pay your employees, which is, you get in big trouble, huge trouble with, like, ours would have been the state of Wisconsin. And if you're not paying your workers' comp insurance, same thing. Like OSHA comes for you and you're like beyond fucked.
Yeah.
So if you're Roku and you can't make payroll and you can't make these things through no fault of your own, but because your bank went up, your whole, like everybody's business, like their entire economy is going to end up being fucked, and which is why the government had to come in and bail it out, because it is such a monumental problem that people weren't really going to address. So we can kind of go into what happened if you're ready for that.
Yeah. That's what I mean. Been waiting with bated breath here. It's crazy.
So, and we were texting a little bit back and forth, and you're like, oh, it's kind of like It's a Wonderful Life.
Yeah.
Shout out Marianne, my mom. It's our all-time favorite movie.
Shout out Marianne.
But if it's, and they had this. What was his last name? George.
Mr. Potter.
Mr. Potter was like
he was the bad guy.
He's like an all-time terrible character. I went to I saw It's a Wonderful Life at Music Box Theater Christmas time.
Oh yeah.
And it was great. It was like a nice night, but every single time Mr. Potter appeared on screen, the audience would hiss. Like,
what?
It was like the first time they did it was like, oh, that's weird. It's kind of funny. Like everybody's in unison. They did it for the entire movie. It was so fucking annoying.
Was it like a group that went to see it, or was it like
whole theater?
Cue cards beforehand? You were just out of the loop. You didn't know.
Because it was a double feature. So I saw White Christmas before that. You ever been to Music Box?
No. I mean, I obviously know of it.
Yeah, it's like 100-something years old. It's pretty cool.
Been to the Tango Sir though.
Yeah, right next door. It's a very nice steakhouse. Yeah.
Mm-hmm.
But anyway, so
George Bailey. I was gonna say George Banks, but like, there's no way the thing about a bank is bank. So George Bailey, and there's like this run on his savings and loans company, and it's like, my money's not in the bank; it's in his house, and it's his house, and they're paying it back with interest, and that's how the business works. And basically, what you had here was a run on a bank, but not because of. You had some upstanding citizen, like best guy in the world, like George Bailey. Like, no, you had a reckless, corrupt asshole CEO who was running amok and making huge gambles and being totally, you had no diversification in the portfolio. They're all in the tech sector, and then they bought all these securities. And there are some things in this story that are a little bit, or a lot bit, outside of like my, like, we'll call it domain of competence, where I really understand like how the Fed rate hikes impact some of these treasury securities. But Silicon Valley Bank, they had like, I think it was like $21 billion in bonds, like in securities. And they bought them, way back when. And then when the Fed, or it was more than that actually, but the Fed, when they raised the rates, it's like the bonds, they're losing money on those bonds. Like the value of the bonds is not what they thought it would be when they had it. So then you're kind of losing money. So they ended up having to sell it was selling $21 billion. That's what it says in the notes here, $21 billion worth of securities. And then people are like, well, why are you doing that? Like you're not liquid. Okay. Like they just didn't have the money to cover some of their expenses because they were getting fucked on these rate hikes by the Federal Reserve. So, and then they also, I think they had a cash offering for shares for another $2 billion. And people are like, what is going on here? So then you had some bigger like VC companies that were banking with them. Like you ever heard, Peter Thiel, that name? Yep.
Okay, so Peter Thiel's company were like, we have to limit our exposure to Silicon Valley Bank. Let's get all our money out of there. So then he basically, when people like him started pulling out, then everybody started pulling out, and then it's like, we just don't have the money, so sorry, okay, like we're fucked, and it's because they had 57% of their entire portfolio were in these treasuries. Okay, so they're way over leveraged in one specific area, and then when they weren't having, and you have to pay premiums on that kind of stuff, so. When the tech industry, because the economy is taking a hit, the tech startup industry specifically is taking a hit. Well, that's like their client base, and that's where their money's coming from. So the money stopped coming in, so then they weren't liquid. So then people were like got scared, and they went to like, we better get our money out now.
Before.
And then it just all blows up on them. Yeah. So, but they were after 2008. There were supposed to be they passed this bill called Dodd-Frank, because prior to, from like, I want to say it was like, this happened under George Bush, and it was a series of presidential, series of people, but George Bush is when it really got out of control. It was like the American dream. Everybody's going to own a home. Okay. So everybody remembers what happened in 2008. Whole economy almost collapsed. The country almost collapsed because of how terrible this thing is. And so they come in, Dodd-Frank, there were two senators, or a senator and congressman rather, and they come up with this set of provisions that are effectively guardrails. So something like that can never happen again. And their CEO of Silicon Valley Bank in 2015 is looking around. He's like, for banks our size, this is really limiting us. And we want to be able to lend out money to these tech startups, because we were still in the end of coming out of what happened in 2008 with quantitative easing. The rates were so low. So they, basically money was effectively free. So they could receive the money from free, basically from the Fed, and lend it out and make a ton of money. So, but there were these guardrails that prevented them historically from being over leveraged and overexposed to different trends in the market, like if the tech sector goes down. And this guy, the CEO, his name is Becker, he lobbies, he goes and speaks in front of Congress, and then he spends $500,000 lobbying Congress to basically like repeal some of these things that were written into Dodd-Frank. Like there was there was a $50 billion threshold where you had to have these different, you had to be liquid. Basically, you had to be able to show that you had $50 billion. If you had $50 billion in assets, you trigger all these things. He's like, that's not really good for us. Make it $250 billion, and they did. So they repealed all these things, and then you find out, well, how did that happen? Okay, well, the bill was sponsored by this guy, Mark Warner, who's a Democratic senator from Virginia. Which it's like, this bank is in California. Why is this guy in Virginia, Mark Warner, sponsoring this? You're supposed to represent the people of Virginia. Okay. So this guy, the CEO, throws a fundraiser for Warner at his house, a campaign fundraiser at his house. The bank personally donates thousands and thousands of dollars through a political action group to Warner's campaign to get this guy elected, to get the bill passed, which they did. So then Trump signed it into law. So it's like everybody has their hands dirty on this thing, where it's like, all the banking sector and the government fucked over the American people in 2008. So as a reaction to that, we put in laws to prevent that from ever happening again. And then, 15 years later, fuck those laws. Let's just do the same thing again. So then he lobbied, got it done. They signed this law into action, and then 7 years later, whatever it's been since the law was passed, here we are again. And there's and the FDIC is saying that it's not a bailout. Of course it's a fucking bailout. Of course it's a bailout, because the Federal Reserve is backed by the taxpayers. So the banks do pay into a fund that is supposed to cover like that $250,000 that I mentioned. But if you look at the amount of, this is like now you're setting a new precedent, because there are $9 trillion in deposits in this country above that $250,000 threshold. So now it's like, if they do it for Silicon Valley Bank, well, then fucking everybody should get a bailout. Every bank now it's like, we can do whatever the fuck we want, because at the end of the day, it's not going to be just the $250,000. They're going to cover basically, essentially, with this new precedent, the full $9 trillion. So that's just going to further incentivize risky behavior. So they incentivize risky behavior by making, the cost of capital is basically free for a long time. And now it's like, so now that some of these bad actors who were doing, the riskier things, where they're like, they have no diversification, because Silicon Valley Bank had basically had no diversification, because if you look at like a Chase or somebody, there's some of these or smaller regional banks, they're going to have some businesses, they're going to have some mortgages, they're going to be dealing with regular people.
Investing in fraudulent schemes.
Left and right.
Like that one. No, I'm saying like that girl. We covered.
Yes. That was Chase.
Like
I think that wasn't that JP Morgan, right?
Yeah. Exactly.
Yeah. So
that's what I mean. I'm not accusing Chase of doing that kind of shit. They got frauded.
They got defrauded. Yeah.
That's what I mean.
But they're so big and they're normal people aren't going to like feel it. But these regional banks, if they're making terrible decisions, then it does have a major ripple effect, and it can impact regular people. If the government didn't, like, imagine if you're a small business and it's like, we have to make this payroll or we have to pay our workers' comp insurance, and we can't. Well, then your business is bankrupt, effectively. Like, you're effectively shut down if you can't make make those payments because you lost it because the bank lost it. And so that to me is just like, it's such bullshit. And it's like you went through it again, and all it took to get these guardrails removed. So, and it's like, and then, that was the other thing. Part of that, the 50 billion versus 250 billion, they also changed. You used to have to be able to do stress tests and liquidity tests. Be like, hey, like, you have to prove how much money in liquid assets like you actually have, and you have to stay above a certain threshold. They changed the law so they didn't have to make the results of the stress test public. So that was another. So that not only did they change the limits, the threshold, but if they failed the stress test, they didn't have to tell anybody. So it's like they basically was like all the precautions and all the things that they put in place so that we couldn't have like another financial crisis. 2008, they just threw it away as soon as nobody was looking. And this tech sector, is going to be volatile. And it was impacted by the economy and the rate hikes. And if the bank itself doesn't have a diversified portfolio, they're going to ride the roller coaster with the entire sector. And if you're in a valley, they're fucked, and like them being fucked screws up everybody else who otherwise would be a healthy company or could be a healthy company. So it's really, to me, disgusting that all it took was a couple of campaign parties and $500,000 worth of lobbying, and I'm sure it'll be fine. Fuck the American people.
Yeah.
That to me is just, it's unconscionable. It's like, and meanwhile, the CEO of Silicon Valley Bank, it's like, hey, like, a couple of years ago, business has never been better. We're making something. I should get a big bonus. So you just skirt the laws, you change the rules, you make terrible risky investments, and then you pay yourself a big bonus. And then when you get fucked over, or when it all comes crashing down, you're not personally liable. You keep your own money. And because now it's that guy, I'm sure that guy banked with himself, and it's insured by, the FDIC. So his money's not going to be touched. He'll get fired and maybe fined. I don't know, but he's not going to go to jail. And I feel like that's something that should have been written into Dodd-Frank. If you do some of these bad business practices where you get yourself over leverage and then you're paying yourself these big bonuses, well, and if it comes back to bite you, well, it should be your own personal assets that get seized or you go to jail. Like there's just no real downside for these executives. And you saw that in 2008 too, where they had the big bailouts, and it came out a few months later that they were paying the bailouts and bonuses for all the people who just got us into this mess to begin with. So that's the part that it just drives me crazy. And it's just one hand washing the other. You need campaign finance fund. We'll change this law so everybody wins except for people, like, I don't know, 99% of the people.
So you said Peter Thiel was the guy who kind of made all these shoes.
He kind of it sounds like Peter Thiel pulling his money was one of the things that really triggered this run on the banks.
Now he is known for being a man of spite.
He is a spiteful person. You want to tell that story?
Now, well, yeah, I mean, that was...
Might as well, if people don't know it.
People don't know. Peter Thiel, he was the one that bankrolled Hulk Hogan in his lawsuit against Gawker.
Yeah,
and Deadspin, Gawker, all those sites. Mm-hmm. He bankrolled Hulk Hogan to basically take down a whole company.
Because Gawker, Deadspin, outed him for being gay.
For being gay,
and
yes.
That story drives me crazy too. Mm-hmm. Because can you, I'm not going to get into how Barstool's treated versus how other companies are treated.
Yeah.
But that is like What a disgusting thing to do for clicks, to kind of uproot somebody's personal life and destroy, not destroy, because I don't know if anybody, but like he clearly didn't want that out. It's his own private business. It's a very sensitive topic, and they outed him.
Yeah.
Disgusting.
Yeah.
Disgusting.
It's terrible.
It is terrible.
No.
Go ahead.
Now, just, did he have any beef with one of these people to make, like,
I don't know. I mean, but I think maybe he was just reading the writing on the wall.
Yeah.
Because, I mean, did he have beef with them? I don't know. But he was banking with them for a prolonged period of time. They're a major bank in California. But he's like, holy shit, like this doesn't look good. And he's a very savvy investor.
Yeah.
I mean, famously from doing Facebook, but he's done a million different projects. Things, so Peter Thiel, like he's a guy who kind of like triggered the massive run, but he did it based on evidence that they're over leveraged and they're not diversified, and the whole tech sector and specifically startups are taking a hit. So I got to limit my exposure because he's a prudent investor who doesn't want to act like this guy Becker and some of these these other bankers who are reckless. And that's one of those things that kind of gets lost over time.
Yeah.
That all of these big banks are publicly traded. Okay. And you're taking other people's money to invest in different things, right? That wasn't the case originally. It used to be like 12 guys sitting around a boardroom, and if you made risky investments and you lost everybody's money, you'd be like, what the fuck are you doing? Like you lost, like where the fuck is my money? And you had to look people in the face. You couldn't wait for the government to come and bail you out. Mm-hmm. And so you were like, when it was like, Lehman Brothers and Partners or something like that. Okay. When it was originally founded, it was literally partners. Okay. So I'm putting my money into this group. You're putting in, we're going to invest it in different areas so we can pool our money to make bigger investments. But there's going to be a stress test, and there's going to be, everybody's going to do things the right way. So we don't get, end up in a situation like 2008, or we're going to, and it's going like, if you are going through that process genuinely trying to raise money, should be fucking hard. Because they should be doing all these different tests and doing their due diligence to read through and make sure. I'm blanking on the woman's name, from the other woman from California, Elizabeth Holmes, who she had Theranos, where she had but she just like suckered all these people because they don't, and there were some VC firms that were like the traditional kind that were involved in that. People put their personal money in, but a lot of times with these big banks now, it's really not. It's not what it was when it's like Goldman Sachs, same thing. Like they started out as this group of just guys. Okay, like I'm sure one of the guys' last name was Goldman. The other guy's name was Sachs. Okay, so but it was like they're putting their own money into this. So like inherently, you're going to do better due diligence and be more careful with how much you're leveraged, where you're investing it. And that is just not the case anymore. It's like they're just taking it from everywhere. You don't have to really, and there's seemingly no consequences.
I mean, we're on the heels of the FTX collapse as well. So
it's exactly
the same thing. I was watching he's a YouTuber. We had him on the Portnoy show actually one time. His name's CoffeeZilla. He was just on Rogan actually.
Okay.
Like last week, I think. And they were saying, like, how do people like fall into this? And his hypothesis, he said on the show, it's just like it takes a good front man, and people bought that story. He drove in a Toyota. It's like, oh, this he's got no reason to steal money. Like he's just a whiz. Like there's certainly no malice behind this guy. And then it takes like other people getting involved. Tom Brady, it's like, whoa. Well, the Brady's people, like he certainly has people that looked into this, and like it's a good strategy. Like that's what Burger King's model is, right? In a totally different. It's probably a bad comparison, but I've heard before. I don't know for sure that basically McDonald's does all the legwork. Right? They're like, hey, this Metro Pop, this corner, this side of the street, here's the best spot to build a McDonald's.
And they build one across the street or something.
And then Burger King's like, hey, they know what they're doing. We're just going to build one across. And that's why you see so many of them. Yeah. That's what I've been told. I don't have a firsthand source in that, but it makes sense.
That's a tale as old as time as far as like the FTX getting like famous people endorsing. I mean, like, who used to use that strategy? fucking Jeffrey Epstein. Hey, why don't you come to this party? Bill Clinton's going to be there.
Yeah.
Well, if the president's going to be there, well, that's certainly worth going to.
And that's what's crazy too, is I genuinely believe there are a large amount of people that probably had no clue that Epstein was, like, you know,
right.
Like no clue.
Right. He was a socialite.
Yes. And that's where, I mean,
yeah,
that's where it gets weird, where it's like,
but yeah, it's one thing to be at a party in New York and rub elbows with them.
It's different to hop on a jet and go to. Yeah,
yes.
Totally. I'm not saying, listen, a lot did.
Right.
A lot did. But I'm saying, like, if someone was just at a party and they took a quick pic with them, like, that sucks.
I think you can explain. It sucks.
Like, we were, you know, we were just, you know, out and about this past weekend.
Yeah, we took a million pictures.
Yeah, exactly. That's what I'm saying. If one of those guys turns out to be a horrible fucking person, it's like, fucking... Sorry.
Yeah.
I didn't know.
That old crow.
Yeah, exactly. Yeah, exactly.
But it's different if you're like, come on down to my island.
Correct.
We got all sorts of nefarious shit going
like
down.
we're calling fucking people Snow White and shit. Like, no, then it's like.
that was, what bank was that guy from? Was he a Wells Fargo guy? I don't want to say. I know, like, basically Epstein was having an email correspondence with one of these big banks, one of the heads of these big banks. Barclays.
Jess Staley.
Okay, and he was like, hey, like, how is Snow White? And he's like, oh, I want, like, Tinkerbell next time or something like clearly, like, using code words to talk about disgusting, illegal, everything. Everybody knows what Jeffrey Epstein was doing down there. So
and J.P. Morgan.
He was with both, right?
Both, yeah.
Yeah. So
he's an exec.
Yeah. So who should be in jail? And that's where it just feels like there's this element of society where there's no punishments for them. There's no punishments. Like, if I, let's say that I didn't gamble responsibly, like literally, right? And I'm like, I'm going to put all my money into, this 16 seed in March, and I lost all of it. The government going to come and bail me out? No, I did something stupid and risky, but they're doing effectively the same thing by putting all their eggs in one basket and not they're not being a responsible bank. They're not leveraged properly, but they're not as liquid. And then they fuck over, and that would be just me. They're fucking over thousands of people, millions of people.
Yeah, but it's hard. It's like, can you hold the customer accountable?
No, and that's why the FDIC is supposed to you're insured up to $250,000.
Yeah,
but. Yeah, I mean that's the tough question, because it's like you don't want the average American to get completely fucked, or even a guy like Peter Thiel. Like, you don't want that has a ripple effect with everybody in the economy.
Yeah, like, I'm gonna be fucking. It's gonna be up to me to do research on the bank. Like,
well, and that's really hard to know that kind of stuff.
100%. People just aren't qualified or smart enough to do that.
Right, because I think with I'm pretty sure Silicon Valley, I shouldn't say pretty sure, they're a publicly traded bank. So I believe, in theory, you could go through their entire investment portfolio and see it. And I think that's, a guy like Peter Thiel can look at that and be like, "Whew, shit." Okay, but people like you and me,
who knows?
Who fucking know? Like, and who has the time to do all that, right? So it's really something. The other updates on this story, HSBC, which is a bank out of England, they have acquired all of Silicon Valley Bank's UK assets. So there's like this unwinding process trying to, and the government has effectively taken over, operations of the bank. But it is a situation where it's like, it's an old cliche, but it's like the risk is private, the losses are socialized.
Yeah.
Because they're just bankrolled by the taxpayer. So and then you are setting this precedent where no matter what, and maybe it was set in 2008, but this is a different sort of situation than that. But it's basically every single, remember the expression? I think there was maybe a documentary, called Too Big to Fail. Okay. Because if you let them fail, then there goes the entire country as we know it.
Yep.
And so you have to bail them out. Too big to fail. Well, now you're basically setting precedent that every single bank in the country is too big to fail. Because the $9 trillion that's out there, if people have their, and it's like, I'm such like a person where I want like less government involvement, but it's like but it's like then people run amok. But that maybe they wouldn't run amok if their own ass was on the line. Mm-hmm. So maybe the punishment literally has to be jail.
Yeah.
And then that would cause you. And then if you don't want to go to jail, you have to be like, look, I did everything right. Where I was diversified, I wasn't leveraged 50-1. It was 12-1. And you did things the right way. And sometimes you just get beat. Right?
Yeah.
Okay, that guy doesn't go to jail. But these other things where it's like, you know what you're doing and you're paying yourself bonuses and you're risking all this shit, and then it blows up and the government has to come in and bail you out, so because everything's too big to fail. Well, your ass is in the clink. Yeah. And I don't know. I don't see any other solution unless you're going after their houses, their boats, all this stuff, because this guy is just gonna walk away from this and probably doesn't need to work another day in his life if he's a CEO of a major California bank like this, and he'll have to suffer some shame and embarrassment, but he probably is going to live out his life just fine. And that, to me, it was called like moral hazard. There's no moral hazard anymore. No one gives a shit. No one gives a shit. No. And this is a moral hazard to do this and set yourself up to pay out yourself big bonuses for a stretch run, knowing that it's, the music's going to stop eventually, but you're just driving home, no problem. You're driving home in your Bentley, no problem. So that to me is bullshit. And it's like, I don't know what the answer is, but like, are we going to keep having these sorts of things? And I think it sounds like this is the first domino, And I believe, I want to say the crypto crash impacted this as well. So now it's like one thing kind of leading to another, and it's just, now the Fed, supposedly the Fed was going to raise rates again, and now they're not because they're like, we can't set off like another domino. So it's tough, and it's like I don't know what you're supposed to do, because you don't want federal control over the entire banking industry. At least I instinctually I wouldn't want that. But then it's like they're not really a private institution anyways, because they're just, we'll just wait for the government to bail us out.
Yeah.
So then it's like I don't know what the answer is, but the way it's been going for our entire adult lives is fucked. Yeah, and something needs to be done about it.
Yeah. Well, we'll see.
Yeah.
We'll see. Definitely a fascinating, scary, all of the above topic that affects everyone. So
Strauss-Howe, man.
Yeah, I know.
Strauss-Howe.
Really, for real.
So, and then you see China's like talking shit now too.
No.
Oh, like Xi is like calling us out.
Oh, really?
Being like, how come the United States can endlessly fund Ukraine, but we can't fund Russia? Why are we not allowed to make money? Like on this thing, and why can't we be involved? And it's like, and they bring up Taiwan, and so it's like we got all these, we got financial problems, we got military problems, we got government problems, and then it's like China, same thing. Where do you think the Mexicans get all the ingredients to make fentanyl and ship it up here from China? Mm-hmm. So it's like there's a lot of fucking shit going on that's just...
You know what, Chief? I don't know where we're going to be in 2030. I don't know if we're going to be still podcasting together or what. Who knows? But
what year is this?
This is 2023.
Yeah.
But I will say, when we're out of the Strauss-Howe cycle, we will do a nice little whatever we're doing a nice little
if we
podcast cycle on happy stories. How about that?
Yeah, I would love that. Yeah. There's 7 years to go. What could go wrong?
Chief will be fucking sleeping like a grandpa by then. He'll be
hopefully. Yeah. God.
All right, everybody. Thank you, Chief.
Maybe this show is why I can't sleep. Got all this existential stress going on.
Maybe, dude. Yeah, it's possible. Yeah. Thank you, everybody, for listening. Thank you for watching. We will be back tomorrow. We'll also be back on Thursday with Nadu. Nadu's going to join us again.
Yep.
We're going to be talking about this whole, speaking of Mexico, the chaos of Mexico and American tourists getting murdered. Terrible, scary. And just kind of talking about Americans going on spring break there and whatnot. So look out for that on Thursday.
Yeah, I really regret talking about my sleep on here, because I'm gonna hear it from my mom. She's like, "Well, take these 4 supplements and try to get some sunlight and all that kind of shit." I'm just gonna get a barrage, which I love. She loves me. but I'm going to have to hear it.
All right, everybody. Thank you for listening. Thank you for watching. We'll see you tomorrow.